morning, good evening, good afternoon, students and traders. This is FXFreedom broadcasting you live on YouTube. And this is the Professional Forex Trading Course 101. Hello Clara, how are you? Hello Ernesto, how are you? Crypto Millionaire, thank you very much. Never forget, everybody, trading is a learnable skill when you learn in the correct way. And never forget, you're going to graduate from this course when, number one, you have your chart set up and ready for trading. We are working on number one. Number two, you have your strategy in place. You understand why you win, why you lose. We are working less on number two today. And number three, you have a complete understanding on how this market works, so you can analyze the market and make an educated prediction. We are working more on one and number three. And for questions and homeworks, you have my email, contact, and Skype. That being said, everybody, I was thinking about NZD USD, but let's open Euro Dollar, Euro USD. Give it a second. Open your charts, everybody, Euro USD. And today we're going to learn about the Contrarian Fibonacci. Euro USD daily chart. Euro USD daily chart is up, right? So no good. Not good. What about Euro Dollar weekly chart maybe? Euro Dollar weekly chart. Euro Dollar weekly chart. Alright, not good too. Alright, everybody, let's go back to NZD USD maybe. It's going to be the best. In the meantime, we are going to use the original Fibonacci, everybody. Number one, we use the original Fibonacci to trade, to determine trend direction, and number two, then we compare trend direction from the larger time frame to the lower time frame. And the last thing we need to identify is in what zone are the Fibonacci's on the larger time frame and the smaller time frame. Okay, so the original, you are all well skilled, nothing special, nothing difficult. Now take a screenshot of this one, everybody. Number two, the Contrarian Fibonacci, and it says we use the Contrarian Fibonacci to, number one, trade retracements. So if you like to trade retracements, if you love to trade retracements, the Contrarian Fibonacci is for you. To find the C of the original Fibonacci. Okay, trading rules: until the extension of the Contrarian Fibonacci is still inside the AB boundary of the original Fibonacci, you are entering trades with a probability 50-50. I'm going to explain this to you later. If you can find a Contrarian Fibonacci with the projected extension above or below the capital A of the original Fibonacci, you are entering 80 to 85 probability trades. Wow, right? Going to explain this to you in about a second. When you find the capital C, your stop loss should go 10 to 100 pips below or above the capital A of the original Fibonacci, and you take profit should go 10 to 100 pips below or above the D, capital D of the original Fibonacci. Number four, when you find the C, you should check the trend direction from the larger time frame and compare it to the lower time frame. So this is the same rule for high probability trades. We should always enter in extensions and in the same direction. All other trades are low probability trades. Everybody take a screenshot photo, type in the chat done, so we can move forward. Things to remember: the higher time frame controls the smaller time frame. The Fibonacci is stronger than the trend line. You want to buy or sell the C and profit take at the D. And finally, number four, you find the C you find the C using the Contrarian Fibonacci. Can we move forward, everybody? Type in the chat done. Take a screenshot photo. Yeah, I know everybody, I have a 20 seconds delay on the chat. Done, boss. Alright. Now, it's a down Fibonacci. Alright. Okay, everybody. So, you have an original Fibonacci, right? You have the original Fibonacci from A to B. Alright, this is your original Fibonacci and it's down this time. You are well skilled, not a problem. Okay, A to B, right? Now, here is the retracement on the Fibonacci. How do you know? This would be one retracement. This would be one retracement. This would be the second one retracement. And this would be the third retracement. How do you know, everybody, how do you know what retracement it's a 50-50 probability rate? And don't mix apples with bananas. When we say 50%, we're talking about the Fibonacci, not strategy or price action in general. Or how do you know this is an 80-20, 80% probability rate? How do you know? Boss, what if the market draw a B and then keeps moving the trend direction and do not retrace to any level? Should we use green target anyway? What are the rules saying, Ernesto? I explained this one too. Everybody, what does the rule say? The market didn't retrace, it just formed the B and it just keeping down. What does the rule say? Should we target the green? Everybody, what does the rule say? Not what does the chicken say. What does the rule say? Hedge fund trader Clara, hedge fund trader Crypto, hedge fund trader Julius, Chila, Jordanka, Ala. What does the rule say? Anybody? Yeah, don't worry, I have a 20 seconds delay on the chat. Yes, Dimitar says yes. Green, absolutely. Everybody, how do you know if you short this C? Just an example. How do you know if you short this C? Something like this. Or you short, here it's another C, you short this C in here. Or there is another C, you short this C up in here. How do you know which one of those shorts on the original Fibonacci is going to give you a chance of success? 50% or 80%? And the answer is, we are going to know using the Contrarian Fibonacci. Alright? Now, from the text, from the picture, what is the picture and the Fibonacci saying, the rules? It says, give me a second. We're going to delete this one, delete this one, delete. Okay? Now, the market starts to go up, something like this. It forms a low and it forms a high. Now, I'm going to use the same rules. Okay, I'm going to spread my Contrarian Fibonacci, which I don't have, so I'm going to change. This is going to be white, this is going to be violet and violet and violet, and this is going to be white, and this is going to be violet, and maybe this is going to be orange, and this is going to be orange, and I'm going to name this one Contrarian Fibonacci, and I'm going to name it, you can name it 1, 2, 3, 4, I'm going to name it sub A, just an example, sub A down in here, up in here is going to be sub B, alright, yes, using the same rules. Somewhere inside this sub A and sub B boundary, everybody, is going to be what? The sub C. What is the sub C? The sub C is the lowest point, not necessarily a low, inside the sub A, sub B boundary, after the sub B, before the market hits the appropriate sub D extension. So good news, everybody, we are using exactly the same rules to monitor the Contrarian Fibonacci. We are just naming it differently. Make sense? You can name it, you know, if the original one it's capital A, capital B, capital C, capital D, then the Contrarian, which is going to have different colors, you can name it 1, 2, 3, 4, or you can name it sub A, sub B, sub C, sub D. There is no right or wrong. And in drawing the Contrarian, the same rules apply. What is the sub A? The sub A is the lowest low, it's the absolute low, it's the starting point of our retracement. What is the sub B? The sub B is the first high as soon as possible after the sub A. Boss, this is too much information. Download the recording from Dukascopy YouTube webinar channel page and watch it over and over again. Maybe it looks like a lot of information, but it's not. It's just changing names. Make sense, everybody? The rules are the same. Sub A, sub B. Okay? Now, why should you learn and use the Contrarian Fibonacci? Because the rules are stating when you find a Contrarian Fibonacci where the projected sub D extension, yes, listen to me, pen and paper maybe, or simply watch the recording, maybe like this, no, like that. When you find a Contrarian Fibonacci with the sub D extension inside the capital AB boundary, then if you short the market in here, this is an 50-50% rate. Make sense, everybody? This is then the C, and the market goes up in here and somewhere in between starts making lower lows, lower highs. This is a 50% rate on the Fibonacci sequence. What does this mean? This means that the market can go down and then can go deeper into retracement, or on the smaller time frames can even stop you out. Alright, everybody, this is what does this mean. Broto, Dimitar, I guess the Contrarian Fibo will tell us. Yes, sir, Broto, what happened when the sub D breaks the A? We're getting there. Okay, everybody, are we clear about the first one? If you find, yeah, we're going to go in on a chart in about a minute, everybody. First the theory, This is the contrarian. If you find your sub-D extension, projected sub-D extension inside the AB boundary, this means that you are entering a 50-50% rate. Okay? You can still win, alright, but it's a 50-50 chance. Sometimes the market is going to go into a deeper retracement, sometimes the market is going to stop you out. The higher the time frame, the lesser the probability of the market stopping you out. Alright? But if you can find, let's say that the market pushed up and hit the sub-D extension, right? Then what I'm going to do, I'm going to readjust the contrarian Fibonacci. Sub A goes to sub C, exactly the same everybody, and sub B goes to sub D, right? And I'm going to readjust my contrarian Fibonacci, sub B to sub A. Now when you look at the original Fibonacci, A to B, and the sub A and the sub B, tell me everybody, is the sub D extension inside the AB boundary or is outside of the AB boundary? Is the projected sub D extension inside the capital A, capital B? Is the projected sub D extension inside the original Fibonacci, or is the projected sub D extension outside? What's the answer? Outside, very good. So when you see something like this, now pay attention everybody, outside, very good. Pen and paper right now. When you see this setup, alright, and you traded the retracement, you won the first retracement trade. Now you have the chance, the opportunity to enter and to trade the second retracement. But the sub D of the retracement rate, it's outside the AB boundary between the original Fibonacci and the contrarian. Who is stronger? Boss, can you repeat please? Yes sir. The market is in here, the original Fibonacci going down is still valid, and the contrarian Fibonacci going up is still valid. Now in between the fight between the bull and the bear, in this very example, who is stronger? Who is going to win? The original, very good. So, would you go long on a retracement rate buying the contrarian, yes or no? The original, yes sir. The A is stronger. So, would you trade this retracement? Yes or no? If you know what you're talking about, would you trade this retracement everybody? Yes or no? If the original is stronger, then between those two, between the fight, exactly, no, very good. Okay, so we are not going to, for the traders who love retracement trading, you stop trading up in here, because 7 times out of 10 the market is going to start reversing, and in this example was what? Red, and the market is going to start gravitate to red. So the Contrarian Fibonacci is a tool that is going to show you where to stop trading retracement, and when you find the sub D outside the original Fibonacci, this is considered from the Fibonacci theory an 80% probability trade on the Fibonacci. Don't mix apples with bananas, okay? We're talking about 80% probability on the Fibonacci sequence. Wow, isn't this great information, everybody? Alright, are we clear? Alright, now let's go on the chart, right? Let's go on the chart. Now this is NZD USD daily chart, everybody. Give me a second, give me a second, give me a second. Okay. So we have our A, we have our B. Tell me, everybody, let's see that this is what you see, right? Where should we start our sub A and sub B? Should we start our sub A at the first circle, or should we start our sub A at the second circle? In the meantime, I'm going to sub A and clone. Yes, first circle, second circle, sub A, sub B. By the way, Clara, tonight we have the lesson. Not tomorrow, sorry, tomorrow, Clara, not tonight. Tomorrow. Today it's Thursday. Tomorrow we have class with the Fibonacci guys. Sub A, sub B, clone, edit label, sub C, and one more, clone, edit label, sub ABCD. Alright. Lower low, second, Broto first. The second one, everybody, the second one is the starting point. Okay, Broto, not the first one. What's the logic behind? If you draw the Contrarian Fibonacci from the first, you could see that the market stopped you out already. Second, all good? Alright, Broto, this is the logic behind. The lowest is the starting point of the Contrarian. Alright, everybody, so the first low is our sub A, and we need to find the first high. This is not sure about that. Yes, it's 1, 2. Okay, so we have our sub A, sub B in here already. The very next candle is the sub B. The very next candle is the sub B. It's a high. Alright, so we have sub A, sub B, and you can use horizontal lines, just color code them differently, maybe yellow and clone, yellow and transparency, okay. Thanks, it will help me understand better. Fibs always start at the relevant lower high starting point or something. Yes, sir. Correct. So this is our sub C. It's the lowest point inside the sub A, sub B boundary after the sub B before the market hits the appropriate sub D extension. Alright, give me a second. There is no high, so sub D is up in here. There is no high before, so again sub A goes to sub C, sub A goes to sub C, and sub B goes to sub D, right? Nothing special about it, everybody. Okay, now I didn't trade the first one, right? And I might not trade the second one because the market didn't make a higher high, higher low. Fair enough, everybody. So I'm going to wait for the market to go up. Now I can see that the market's making higher highs, higher lows, right? Can you see it, everybody? I might not take the first trade or the second one as a retracement trader, so I'm going to wait. And now that the market made a high, right, let's wait. Okay, the market, so this was the, again, sub C down in here, sub D, the market hit the sub D extension, and 1, 2, sub D must be a high. I have a new Fibonacci sequence, sub A in here and sub B up in here, sub D down in here. Okay, everybody, are you willing to take this trade? Just an example, and by the way, you can trade this on all time frames, make sense? It's all the same, monthly, weekly, daily, 1 hour, 2 hour, 4 hour chart. Would you take this retracement trade, everybody? Boss, but you said the retracements are riskier. Yes, they are. What of candle after B? Bullish candle. To go long, everybody? Would you take this trade? Now, risk reward ratio to go from here to here, it's, give me a second, everybody, foreground color. Now, risk reward ratio, clone. I cannot put the stop loss below the sub A, right? But I can put the stop loss below the candlestick formations. Julius says no. Alright. So let's see what is going to happen. The market is sideways, going up, down, going up. Bam! Hit our D. Alright. So again, repetition, you know, this is our D. Need to be a high. Wait for 1, 2. Alright, there you go. And this is our C, right? So sub A goes to sub C, and sub B goes to sub D, and the next Fibonacci sequence. Okay, so we are waiting for a setup, maybe deep retracement. Let's see how the market is going to behave, going down and again up and sideways and up and down, and one more up, bam, hit our sub D extension again. So we could win from the very beginning, right? Maybe 1, 2, this would be the third winner, shallow C, so this would be now our C, sub C up in here, and sub D up in here. Need to be a high, 1, 2, there you go. And again, sub B goes to sub D, sub A goes to sub C, and give me a second. This is the lowest point, this is the lowest point, there you go. Alright, everybody, now can you see it in here? Where is our sub C? Do you see where is our sub D extension, everybody? Yes, this is a live chart right now. Is our projected sub D extension above or below, or still inside the AB boundary, or it's above? I don't understand the Contrarian Fibonacci, I mean the first Contrarian. Shola, what is bothering you? We found the low, and then we found the high. What is bothering you with the first one? This is the low, and the blue candle, this is the high. Shola. Above, very good. A to B. In the meantime, everybody, so our sub D extension, it's above, right? Now let's see how the market is going to behave. Going up, going down, sideways, right? Now from the very beginning, this is the uptrend line, and going up, going up, going up, going up, going up, going up. From the very beginning, everybody. Alright? From the very beginning. Alright, retracement traders. If this would be the counter trend line to go long, would you take this trade? This would be the risk this time. Now it's doable, right? Now it's doable. You are risking one and going after 1 and 1.5, maybe 1.7, whatever, right? Counter trend line break, maybe. So this would be the one more time. You would enter here. This was the close of the candle. This is the stop loss and clone. You would go 1 for 1.3, 1.2 maybe, right? Would you go long, everybody? It's a great risk reward ratio. Would you take this rate going long? Boss, the market's making higher highs, higher lows, exactly. Higher highs, higher lows, right? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And you won 1, 2, 3. You won 3 times. Would you take this trade going long? No trade. Ernesto, you must be a genius. No trade, right? No. But it's moving up, boss. Look in here, everybody. It's moving up. It's moving up. Why wouldn't you take this trade? It's moving up. Look in here. Alex or John or Jean-Paul are making money. Why wouldn't you take this trade? John and Alex and Jane are making money right now. No, why not? What's the logic behind? Remember, everybody, John and Jane and Alex and Gianpaolo, they are going to win 3 times out of 10. But the same John, Alex and Jane and Gianpaolo, if they are going to continue to trade this kind of retracements, they are also going to lose 7 times. Alright? So let's see how the market, see, it's almost, see how this works? Almost broke the A, right? And now, so it depends where you would have the courage to enter. This was the trend line break first. to go short, right? Shorting the market. Or if you would have courage to enter in here, everybody, you know, maybe in here, you know, this is the stop loss, so it's red, right? And 1 for 1, 1 for 2, 1, 2, 3 and something. Okay, so the market reversed and pushing down, pushing down, pushing down, right? Okay, and we are here right now. Origin is down, probability. Okay, everybody. Now, let's open NZD-CAD, and starting from today, give it a like, give it a thumb up if you think this is valuable. I'm going to show you an unnecessary losing trade. So starting from today, with the knowledge with the Contrarian, those retracement losers. What happened? Come on, J4X. Bucked. Everybody give it a second. Looks like J4X frozen. Come on, J4X. Not working. Not responding. Alright. Closing maybe. Give it a second. Otherwise we go. Oh, there you go. NZD-CAD finally. Everybody look in here. This was an unnecessary loser in here. Can you see it, everybody? NZD-CAD daily chart. Now I'm not sure if I do have. Let's see. I'm not sure if I had the Contrarian A to B up in here. Give me a second, everybody. Edit levels. Contra, yes I do. So sub A and clone. Up in here is going to be sub B. Alright, everybody, and let's color code this in maybe green and this one in green. Alright, and somewhere in here is going to be the sub C, sub C, sub A, sub B, sub C, and finally up in here is going to be the sub D, right? So we are talking about retracement trading. Lost connection. So sub A to sub B, sub B to sub C to sub D must be a high up in here. Sub A goes to sub C and sub B goes to, let's make it smaller. Okay, sub B goes to sub D, and the new Fibonacci sequence, right? Sub A to sub B. Again, shallow retracement. This is the sub C in here, and must be a high, not a high, not a high, not a high, not a high. Up in here, now this is where you have the sub D. And by the way, the sub D equals to the capital C. Alright. And one more time, sub A goes to sub C and sub B, if I can take it, sub B goes to sub D. Alright. Okay, everybody? Well, yes, it's still inside the AB boundary. I was thinking that maybe I can show an example where, you know, sub A, sub B, sub C, sub D. It was a 50% trade, everybody, makes sense? Boss, what do you mean? Alright. Is the sub D extension, you don't see the future, is the sub D extension inside the AB boundary, or is the sub D extension outside the AB boundary of the original Fibonacci? Yes, the sub D. It's important to understand this, everybody, because you cannot just blindly trade retracements, make sense? Boss, I don't understand. The contrarian Fibonacci is going to show you if this C, it's what we call a confirmed C. So because the sub D is still inside the AB boundary, this capital C is not confirmed. Well, this then means that I can do a retracement trade. You can, but it's risky. All of those are risky trades. Make sense, everybody? What is the logic behind? The original Fibonacci is stronger. Does this make sense to you? Don't trade just blindly, you know. I'm going to go long because the sub D is still inside the AB boundary. If you go long, risk less. Because this is an example where the sub D was still inside the AB boundary, the capital C was not confirmed, and the market reversed. And it's pushing down. Boss, this is too much information. Download the recording from Dukascope YouTube webinar page and watch it over. By the way, we are going to spend a month on the Contrarian, don't worry. Today is just one lesson. But practice, practice, practice. Okay, everybody? So, but still it goes. If you short the market in here because you had a signal, right? What is the signal? Counter trendline break, you know. We don't know what is going to happen, but so far the market is pushing down. This is what we call a 50% trade, because in the end the market can do anything it wants. Make sense, everybody? The market is going to go or down to the green D extension, or in between is going to reverse and push back up into a deeper retracement. Boss, how do you know? I don't know. This is the game. I don't know. Make sense, everybody? So it's not just the Fibonacci, it's the combination of everything that you have learned so far. Monthly bands, plus market wave, plus short-term trends, plus trend lines, plus candlestick formations, plus support, resistance, pivot points, and now finally plus the Fibonaccis. Alright, everybody, our time is up. See you back tomorrow. Not too much. What's Thursday today? Okay, today's Thursday, everybody. Study the Fibonaccis. This is our last lesson of the week. Study the Fibonaccis and come back on Monday with questions. Have a great weekend, everybody.